Welcome to Audiobook Learning, presented by All the Stories channel. Today's feature is Fiat Currency, the Double-Edged Sword, written by Delmar Sosi. Introduction. What is fiat currency? Definition of fiat currency. Fiat currency is a type of money that is not backed by a physical commodity like gold or silver. Instead, its value is derived from the trust and faith that people and governments place in it. Unlike commodity money, which has intrinsic value, or representative money, which is backed by a promise to convert it into a commodity, fiat money is valuable primarily because a government maintains its legal status as acceptable for meeting financial obligations. Brief history of money and the emergence of fiat currency. Origins of money. Money has evolved through many forms, from physical commodities like grains and livestock, used in barter systems, to metals like gold and silver, shaped into coins with designated values. The need for standardized currency arose from the desire to simplify transactions and support increasingly complex economies. From commodity to fiat. Ancient origins. The concept of fiat currency is not new. Ancient Chinese emperors in the 11th century issued paper money with the decree that it must be accepted to pay taxes and trade debts. Renaissance and beyond. The use of paper money in Europe became more common in the 17th century with the establishment of banks that issued banknotes backed by precious metals. These notes could be exchanged for gold or silver on demand. The shift to modern fiat currency. The global transition to fiat currency occurred gradually. A pivotal moment came in 1971 when the United States, under President Richard Nixon, ceased to allow the conversion of the US dollar into gold, effectively ending the Bretton Woods Agreement. This marked the start of the modern era of fiat currencies, where most global currencies are governed solely by monetary policy without backing by physical commodities. Modern implementation and global acceptance. Today, all major global currencies, such as the US dollar, euro, and Japanese yen, are fiat currencies. The stability and value of these currencies are maintained not by physical assets but through regulation, policy, and public confidence. Importance of fiat currency in today's economy. Fiat money has become the backbone of the modern global economy. It allows for the flexible management of economic variables by central banks and governments, and supports a dynamic and interconnected global marketplace. While it presents risks like inflation and dependency on government policies, its benefits include the ability to manage economic downturns and promote long-term growth without the limitations of a fixed commodity reserve. Deep dive into fiat currency. Case studies. Impact of fiat currency adoption. 1. Germany post-World War I, Weimar Republic. Context. After World War I, Germany faced immense war reparations that it could not pay in gold or foreign currency. Action taken. The government began to print more money to meet demands, which was still technically backed by gold but without sufficient reserves to justify the amount. Outcome. This led to hyperinflation, culminating in 1923. Prices doubled every few days, and the German mark became virtually worthless. Lesson. This example illustrates the risks of unchecked fiat money expansion and the importance of maintaining fiscal discipline. 2. United States in the 1970s. Context. The U.S., under President Nixon, officially stopped converting dollars into gold in 1971, which effectively transitioned the U.S. to a fiat currency system. Action taken. This move was intended to address the country's ongoing inflation and trade deficits. Outcome. Initially, it led to stagflation. High inflation combined with high unemployment and stagnant demand in the country's economy during the 1970s. However, it also provided the Federal Reserve with more control over monetary policy. Lesson: the U.S. example shows how fiat currency can give governments the tools to manage economies but also the careful balance required to prevent economic overheating. Economic theories: understanding value and stability in fiat systems. Keynesian economics. Overview: Keynesian economics argues that governments can influence macroeconomic productivity levels through public policies and that active policy responses are necessary to stabilize economic fluctuations. Application to fiat money. Keynesians often support the use of fiat currency because it allows more leeway for governments to adjust economic policies, such as fiscal stimulus or contraction, without being constrained by gold reserves. Modern examples: economic stimulus packages during recessions, like those seen during the 2008 financial crisis and the COVID-19 pandemic, demonstrate Keynesian principles in action, enabled by fiat currency systems. Comparative analysis: fiat versus commodity-backed systems. Stability and inflation. Fiat systems can be prone to inflation if not properly managed, as the temptation to print money can be high. However, with prudent fiscal and monetary policies, fiat systems can be remarkably stable. Commodity-backed systems tend to be more stable in terms of inflation, as the money supply is limited by the amount of commodity, usually gold, the country possesses. However, they are less flexible in dealing with banking crises and economic recessions, as the fixed supply of gold can lead to deflationary spirals. Economic growth. Fiat systems offer greater flexibility for governments to invest in growth during downturns, as they are not limited by gold reserves. Commodity-backed systems, economic growth can be constrained by the limited supply of gold, which might not be adequate to support growing economies without resulting in deflation. Response to economic crises. Fiat systems allow for aggressive responses to economic crises, including quantitative easing and other forms of monetary stimulus. Commodity-backed systems, historically limited in their ability to respond to financial crises due to the inflexible nature of gold reserves. Chapter 1: The Basics of Fiat Currency. How fiat currency is created. Fiat currency, by definition, is legal tender whose value is backed by the government that issued it rather than a physical commodity or asset. The creation of fiat money is primarily a function of the nation's central bank in coordination with the Treasury, or equivalent government finance authority. Here's how this process typically unfolds. 1. Monetary policy decisions. The central bank determines the need for increasing or decreasing the money supply based on various economic indicators and objectives such as inflation rates, unemployment, and economic growth. 2. Issuing currency. Based on these decisions, the central bank can issue new money. Most modern money is created digitally, as bank reserves, while a smaller proportion is physical currency. When banks require more money, they can request it from the central bank, which then credits the bank's account or, in the case of physical money, prints and delivers the currency. 3. Lending and multiplying. The new money is typically introduced into the economy through banks when they make loans. A bank keeps a fraction of deposits as reserves and can lend out the remainder. This process is repeated across the banking system, effectively multiplying the initial amount of money created by the central bank. Real-life example: quantitative easing. During the 2008 global financial crisis and the subsequent economic downturn caused by the COVID-19 pandemic, the Federal Reserve and other central banks engaged in quantitative easing. This involved creating large amounts of fiat money to buy government bonds and other financial assets. This process increased the money supply, lowered interest rates, and aimed to boost economic activity. The role of central banks in fiat currency systems. Central banks play a crucial role in managing a country's currency, money supply, and interest rates. Their goals typically include stabilizing the currency, controlling inflation, achieving full employment, and fostering economic growth. 1. Monetary control. By adjusting the interest rates and through open market operations, buying and selling government securities, central banks influence how much money is in the economy and how expensive it is to borrow money. 2. Lender of last resort. Central banks stand ready to lend money to financial institutions in distress, ensuring the stability of the financial system. 3. Government's bank. Central banks handle the government's transactions and help manage its public debt. Real-life example: European Central Bank, ECB. The ECB has been instrumental in managing the euro, especially during the European debt crisis, by using tools like long-term refinancing operations, LTROs, and targeted longer-term refinancing operations, TLTROs, to maintain liquidity in the banking system. Differences between fiat currency and commodity-backed currencies. The key difference between fiat currencies and commodity-backed currencies lies in what gives them value. 1. Backing. Fiat money is backed solely by the trust and authority of the government issuing it, without any physical commodities backing it. Commodity-backed currencies, like those under the gold standard, are backed by a physical good held in reserve. 2. Flexibility. Fiat currencies offer greater flexibility for governments to implement monetary policies as they are not constrained by the amount of reserve commodity. Commodity-backed systems are limited by the physical reserves they hold, restricting their ability to adjust to economic changes. 3. Economic stability. While fiat money systems are seen as more prone to inflation due to the potential overproduction of currency, commodity-backed systems can be restrictive and lead to deflationary spirals during economic downturns. Real-life example: the gold standard. The United States and many other countries operated under a gold standard until the 20th century. The U.S. fully abandoned the gold standard by 1971 under President Nixon, largely due to its inflexibility in dealing with growing economic needs and international trade demands. Chapter 2: Benefits of Fiat Currency. Ease of monetary policy and control. Fiat currency, by its very nature, provides governments and central banks with a high degree of control over national economic policies. This flexibility is crucial for adapting to changing economic conditions and targeting specific economic objectives such as controlling inflation, managing unemployment, and stimulating economic growth. Monetary policy tools. Central banks use various tools to manipulate the money supply and influence interest rates. These include open market operations, changing reserve requirements for banks, and adjusting the interest rate at which banks can borrow from the central bank, often referred to as the discount rate. Responsiveness. Fiat money systems allow for rapid responses to economic crises. Central banks can quickly adjust the money supply to counteract economic downturns or overheating economies without the need to match these adjustments with physical reserves. Managing economic variables. Inflation control. One of the primary roles of central banks is to maintain price stability. By adjusting the money supply and interest rates, central banks can influence inflation. Typically, a low and stable inflation rate is a sign of a healthy economy. Increasing money supply. When an economy faces recession, central banks may increase the money supply by lowering interest rates and buying government securities. This makes borrowing cheaper, encouraging spending and investment. Decreasing money supply. Conversely, to tackle high inflation, central banks may decrease the money supply by raising interest rates and selling government securities, which cools down spending and investment. Unemployment management. Central banks also aim to manage unemployment through monetary policy. By lowering interest rates and increasing the money supply, they can stimulate economic activity, leading to job creation. Quantitative easing, QE. This is a monetary policy whereby a central bank buys predetermined amounts of government bonds or other financial assets to inject money directly into the economy. An increase in the money supply lowers interest rates and raises asset prices, which boosts economic activity and reduces unemployment. Case studies from different countries. 1. Japan's fight against deflation. In the early 2000s, Japan faced chronic deflation and stagnant growth. The Bank of Japan, BOJ, adopted an aggressive monetary policy strategy involving QE to reverse deflation and stimulate growth. The central bank targeted an inflation rate of 2%, attempting to infuse the economy with enough money to kickstart inflation. While the results have been mixed, this approach underscored the potential of fiat currency systems to aggressively address entrenched economic problems. 2. The European Central Bank during the Eurozone crisis. The 2008 financial crisis hit many Eurozone countries hard, leading to high unemployment and low growth. The European Central Bank, ECB, implemented several policies aimed at stimulating the economy. These included lowering interest rates to unprecedented levels and purchasing large amounts of sovereign and corporate bonds. These measures were designed to increase liquidity in the financial system, encourage lending, stimulate investment, and ultimately, reduce unemployment. 3. Brazil and inflation control. In the mid-1990s, Brazil was experiencing hyperinflation. In 1994, it introduced a new currency, the real, as part of a broader plan to stabilize the economy. The central bank aggressively raised interest rates to curb inflation. The plan, known as the Real Plan, was successful, demonstrating how fiat currency managed under strict monetary policies could stabilize an economy experiencing extreme inflation. The flexibility and control provided by fiat currency systems allow governments and central banks to respond to economic changes and challenges effectively. Whether it's fighting inflation, managing unemployment, or stimulating economic growth, fiat currencies give policymakers the tools they need to address these issues dynamically. Fiat currency systems have their drawbacks and risks, notably inflation if not managed correctly, but as shown through various international case studies, their benefits in terms of economic management and policy responsiveness are substantial. Central banks around the world continue to use the tools provided by fiat money to navigate complex economic landscapes, demonstrating the enduring value and utility of this form of currency in the modern economic order. Chapter 3: Challenges and Criticisms of Fiat Currency. Fiat currencies, while providing flexibility and control over economic policy, also bring significant challenges and criticisms. These issues range from the tendency to drive inflation to creating persistent debt cycles, with economists and financial experts often debating their long-term viability. This chapter explores these challenges through historical examples and expert analyses. Inflation and hyperinflation examples. Hyperinflation in Zimbabwe. Zimbabwe's hyperinflation, which peaked in 2008-2009, is one of the most severe examples of inflation spirals that can occur in a fiat currency system. After a series of poor economic decisions, land reforms that disrupted agricultural production, and political instability, Zimbabwe's government began printing money excessively to pay its bills. This lack of fiscal discipline led to hyperinflation, where the prices of goods and services skyrocketed daily, peaking at a staggering 79.6 billion month-on-month in November 2008 according to the Cato Institute. The Zimbabwean dollar became virtually worthless, pushing people to adopt foreign currencies for daily transactions. This crisis underlines the dangers of unchecked money printing in a fiat currency system where the government does not manage its monetary and fiscal policies responsibly. Venezuela's economic crisis. Similar to Zimbabwe, Venezuela has experienced severe hyperinflation since 2014, driven by an over-reliance on oil revenues, political corruption, and a lack of economic diversification. As oil prices fell, the government began to print more bolivars to cover budget deficits, leading to hyperinflation. By 2018, prices were doubling every 19 days on average. This has resulted in severe economic hardship for Venezuelans, with profound impacts on daily living conditions, and has spurred a significant refugee crisis. Venezuela's situation is a stark reminder of how fiscal mismanagement in a fiat currency system can lead to economic destabilization. The debt cycle associated with fiat currency. Fiat currencies facilitate a borrowing culture because governments can essentially print money to cover debts, leading to potentially unsustainable debt levels. This can perpetuate a cycle of debt that poses significant risks to economic stability. The U.S. debt cycle. The United States, which has the world's largest national debt, illustrates the potential for fiat currencies to enable expansive government borrowing. U.S. government debt has increased significantly, particularly during economic downturns, when it has ramped up public spending to stimulate growth. While such spending can cushion the economic blow during recessions, it also increases national debt. Critics argue that this growing debt burden could eventually cause economic problems if investors start doubting the government's ability to repay its debts. Japan's debt concerns. Japan is another example where the debt cycle is evident. The country has one of the highest public debt to GDP ratios globally, largely due to decades of economic stagnation and deflationary pressures, which led the government to undertake massive fiscal spending, funded largely through bond issuance. Although Japan has managed its debt without crisis, thanks partly to its ability to print money, some economists worry about the sustainability of this approach if confidence in government bonds wanes. Criticisms from economists and financial experts. Critique by classical and Austrian economists. Economists from the classical and Austrian schools often criticize fiat currencies for their lack of intrinsic value and potential for government misuse. They argue that fiat money is less stable and more prone to inflation than commodity-backed money because it is not based on a physical good whose supply is limited. Notable economists like Friedrich Hayek and Ludwig von Mises have advocated for a return to commodity-based money or at least some form of currency competition to discipline government actions. Modern monetary theory, MMT, critique. While not universally against fiat money, proponents of modern monetary theory critique the conventional view on the dangers of government deficit spending. They argue that since governments that issue their own currency can always print more money to service their debts, the primary risk is inflation, not insolvency. However, MMT also emphasizes the need for responsible money creation to avoid inflation, aligning with broader concerns about fiat currency management. The challenges and criticisms associated with fiat currency are significant and multifaceted. From devastating instances of hyperinflation in Zimbabwe and Venezuela to the intricate debt cycles seen in the United States and Japan, fiat currencies can exacerbate financial vulnerabilities if not managed with strict discipline and foresight. The debate among economists about the merits and risks of fiat money continues, reflecting deep divisions on how best to secure economic stability and growth. While fiat money offers unparalleled flexibility in economic policy, it requires a balanced approach to harness its benefits while mitigating its risks effectively. Chapter 4: The Future of Fiat Currency. As the global economy continues to evolve, the future of fiat currency is a subject of considerable debate and speculation. This chapter explores potential trends in fiat currency usage, examines the impact of emerging digital currencies and blockchain technology, and speculates on the longevity of fiat currencies in an increasingly digital financial landscape. Potential future trends in fiat currency usage. As we move deeper into the 21st century, several trends could significantly affect how fiat currencies are used globally. 1. Increased digital transactions. The trend toward digitalization is accelerating. More people are moving away from cash in favor of digital payment methods, such as credit cards, mobile payment platforms, and even cryptocurrency. This shift is likely to continue as technology becomes more integrated into daily life, making digital transactions more convenient and secure. 2. Central bank digital currencies, CBDCs. Many central banks are exploring or have already started developing their digital currencies. These CBDCs are essentially digital forms of fiat money. Unlike cryptocurrencies, which are decentralized and often operate without any central authority, CBDCs are issued and regulated by national central banks. For example, the People's Bank of China has advanced its trials with the digital yuan, aiming to replace some of the physical currency in circulation. 3. Inflationary pressures and monetary policy. In the aftermath of the global COVID-19 pandemic, many countries have increased their money supply as part of their economic stimulus measures, potentially leading to inflationary pressures. How central banks manage these pressures could redefine the role of fiat currencies in maintaining economic stability. The impact of digital currency and blockchain technology. The rise of digital currencies and blockchain technology could profoundly impact the traditional fiat currency system. 1. Cryptocurrencies. Bitcoin and other cryptocurrencies have introduced a new form of money that operates independently of traditional fiat currency systems. While not likely to replace fiat currencies entirely due to their volatility and regulatory issues, cryptocurrencies are increasingly viewed as legitimate financial instruments for investment and even as a hedge against fiat currency inflation. 2. Blockchain and increased transparency. Blockchain, the technology underlying cryptocurrencies, offers significant benefits in terms of transparency and efficiency. The adoption of blockchain technology by financial institutions could lead to more secure and efficient transaction methods, potentially reducing the cost and increasing the speed of transactions. This technology could also be used by central banks to issue and track CBDCs. 3. Decentralized finance, DeFi. The DeFi movement is leveraging cryptocurrency and blockchain technology to recreate traditional financial instruments in a decentralized architecture, outside of corporate and governmental control. This trend could challenge the traditional banking system and fiat currencies, particularly if it scales effectively to provide stability, regulatory compliance, and enhanced consumer protections. Speculations on the longevity of fiat currencies. Considering these trends, several speculations arise regarding the longevity of fiat currencies. 1. Coexistence with digital currencies. It is likely that fiat currencies will continue to exist alongside digital currencies. Each serves unique purposes, and their functionalities may complement each other. For instance, fiat currencies offer stability and are widely accepted, while digital currencies offer efficiency and decentralization. 2. Transformations in money supply management. As digital transactions become more prevalent, central banks may innovate their approaches to managing the money supply. This could involve more dynamic and real-time methods of monetary policy implementation. 3. Potential for disruption. The increasing credibility and acceptance of digital currencies, coupled with advances in blockchain technology, could disrupt the traditional fiat currency system. However, significant challenges need to be addressed, including volatility, regulatory acceptance, and the integration of new technologies with existing financial infrastructures. 4. Economic and political factors. The future role of fiat currencies will also heavily depend on economic and geopolitical developments. Economic crises, wars, and political upheaval can drastically affect trust in fiat currencies and might accelerate the shift to alternative forms of money. The future of fiat currency is intertwined with technological advancements and socio-economic trends. While fiat money is likely to remain a cornerstone of global economies for the foreseeable future, its functions and forms may evolve. The integration of digital technologies, especially blockchain and cryptocurrencies, will play a critical role in shaping the next era of monetary systems. As we speculate on these future developments, it becomes clear that adaptability and forward-thinking regulatory frameworks will be crucial in navigating the impending financial landscape. Conclusion: the role of fiat currency in global economics. Fiat currency has been a cornerstone of modern global economics, acting as the primary medium of exchange in nearly all countries around the world. Throughout this ebook, we have explored the various facets of fiat currency, including its creation, management, benefits, challenges, and the potential future trends that could redefine its role in the coming years. Here, we summarize the key points covered and provide final thoughts on the continuing importance and evolution of fiat currency in global economics. Summary of points covered. 1. The creation and function of fiat currency. We discussed how fiat currency is created by central banks and enters circulation through the banking system, enabling governments to exert considerable control over their economies. This control facilitates responsive and flexible economic policy making tailored to national needs. 2. Benefits of fiat currency. Fiat currency provides several advantages, including the ability to manage economic variables such as inflation and unemployment through monetary policy adjustments. These capabilities have been crucial in stabilizing economies during financial crises, as evidenced by the actions of central banks during the 2008 financial crisis and the COVID-19 pandemic. 3. Challenges and criticisms. Despite its benefits, fiat currency faces significant challenges, including susceptibility to inflation and hyperinflation when poorly managed. Historical examples like Zimbabwe and Venezuela illustrate the dire consequences of mismanaged fiat systems. Furthermore, fiat currencies facilitate growing national debts and present various economic and financial stability risks. 4. The impact of digital technology. We examined the influence of digital currencies and blockchain technology on traditional fiat systems. Innovations such as Bitcoin and other cryptocurrencies introduce new ways of thinking about money that challenge the traditional fiat currency system. Moreover, the development of central bank digital currencies, CBDCs, could integrate the benefits of digital technology with the regulatory oversight of fiat currency. 5. Future trends and speculations. The future of fiat currency is likely to be marked by increased digitalization and possibly a gradual integration or coexistence with digital currencies. This evolution will require robust regulatory frameworks to manage the risks associated with digital money and ensure economic stability. Final thoughts on the role of fiat currency in global economics. The journey of fiat currency through history has been one of innovation, adaptation, and at times, profound challenges. Its role in global economics is undeniable, acting as both a facilitator of extensive economic growth and, occasionally, a vector for significant economic distress. The continued importance of fiat currency. Despite the rise of digital alternatives, fiat currency remains critically important to global economic stability. It is an essential tool for governments to implement policy, manage economic cycles, and stimulate economic activity. The trust and stability it offers, when well managed, are invaluable in maintaining the social and economic order. Adaptation and evolution. As we look to the future, fiat currency must evolve to meet the challenges of a rapidly changing economic landscape. This evolution includes not only embracing digital technology but also enhancing the transparency, efficiency, and inclusiveness of monetary systems. Central banks around the world will need to innovate continually and learn from both past mistakes and successes. Balancing innovation with stability. The integration of new technologies such as blockchain into fiat systems presents a unique opportunity to enhance the functionality and efficiency of traditional currencies. However, it is crucial that this integration is handled with care to avoid undermining the stability of the global financial system. The role of regulation. Effective regulation will be crucial in shaping the future of fiat currency. Policymakers must balance the need for innovation with the need for stability, ensuring that new technologies bring benefits without disproportionate risks. While the face of money may change, the need for a stable, trusted, and efficiently managed form of currency will remain. Fiat currencies, whether in digital or paper form, will continue to play a crucial role in global economics, supporting not just national economies but the very fabric of daily economic interactions. As we move forward, the lessons learned from the past and the innovations of the present will guide the evolution of fiat money, ensuring its relevance and functionality in the global economy of tomorrow. Closing remarks. As we conclude our exploration of the double-edged sword of fiat currency, it is clear that fiat currency stands as a monumental invention in human economic history, wielding immense power over our financial systems, our economies, and by extension, our very lives. Like any powerful tool, its effectiveness and safety lie heavily in the hands of those who wield it. This brings us to a critical crossroads, where knowledge, vigilance, and informed debate become our best tools for navigating the future. Fiat currency, unbacked by physical commodities, relies fundamentally on trust in our institutions, in our economic policies, and in the global frameworks that support them. This trust is both its greatest strength and its most significant vulnerability. As we have seen through various examples from Zimbabwe to Venezuela, the misuse or mismanagement of this trust can lead to catastrophic economic consequences. Conversely, when managed with prudence, foresight, and a keen sense of responsibility, fiat currency can be a key enabler of prosperity, stability, and innovation. Looking ahead, we stand on the brink of potential massive transformations in our monetary systems with the advent of digital currencies and blockchain technologies. These innovations promise to redefine what money is and how it operates. As these new forms of currency gain traction, they will test the resilience and adaptability of fiat currencies like never before. It is incumbent upon us, policymakers, economists, scholars, and citizens to engage actively with these issues. We must educate ourselves, participate in economic discussions, and advocate for policies that safeguard economic stability while fostering innovation. The future of fiat currency will not solely be shaped by market forces or technological advancements but by the collective decisions and actions of societies around the world. Let us therefore approach the future with both caution and optimism, armed with the knowledge that while fiat currency is indeed a double-edged sword, it is one that we can wield wisely to carve a path towards sustained economic health and prosperity for all.